Mike Nicholson, CEO of IPC, and Erik Kristiansen, Equity Research Analyst here at Pareto Securities. A warm welcome to both of you.
Thank you very much.
And Mike Nicholson, could you please start by telling the history of IPC, because you're a spin-off from London Group?
No, that's absolutely correct. Yeah, we didn't exist back at the beginning of 2017. And with the success of Lundin Energy's business in Norway, the non-Norwegian producing assets of Lundin Energy were being overwhelmed. So what the Lundin family, who are serial resource entrepreneurs and have created tens of billions of dollars of value in the space, decided the best thing to do would be to take a subset of the Lundin Energy team, spin the assets out, and really use that as a platform to build a new internationally focused company at a point which was cyclically low. And that's really exactly what we've done. We've been quite active. We've made 4 acquisitions in the past 4 years. We've increased our reserve base by more than 9 times. We've doubled the number of employees. We've more than quadrupled our production, and we've got in excess of 1 billion barrels of contingent resource. So it's been quite an active time in these past 4 years.
Just touching on that history, I remember when it was spun off, it was 10,000 barrels per day, quite short reserve life. Can you just touch a bit on exactly where you are on production, reserve life, that kind of where the business has been taken since then?
Yeah, that's a great question, Erik. So yeah, so from the 3 assets that we had, we were producing around 10,000 barrels a day. It was a fairly short reserve life. We had only 8 years reserve life. So one of the big challenges for us was to really try and increase the longevity of that reserve life. We were bullish about long-term oil prices, and we wanted to acquire as much resource as we could and position the company for a cyclical upswing. And that's exactly what we've done. If you look at our production numbers this year, with our 270 million barrels of 2P, we've now increased that reserve life to almost 18 years. So that means we can sustain those production levels for many years ahead, and significant cash flows, of course, on the back of that.
Yeah, and can you touch on that? What kind of cash flows are we talking about at the current production level, if you just take the current oil prices or around this level and current production?
Yeah, so it's quite, I would say that IPC is probably one of the most attractive companies from a free cash flow yield perspective. If we look at oil prices, $65 Brent or $75 over the 5 years, if all we do is develop our 2P reserves, we can keep production flat at 45,000 barrels a day. That will allow us to generate somewhere between $900 million at 65 Brent and $1.2 billion of free cash flow at $75 per barrel Brent. And that represents a free cash flow yield on average every year of between 26% and 35%. Or to put it another way, we can effectively liquidate our enterprise value in 5 years at $65. We'll still have 2/3 of the reserve base, and we'll still have 1 billion barrels of undeveloped resource. So pretty impressive cash flow numbers.
Yeah. And if you do that, generate that kind of cash flow, how do you prioritize between, call it, buying back your own shares, dividends, and further M&A opportunities? Because it's been quite a growth story already.
Yeah, I think with those kind of numbers, we have the flexibility to do all of those. Yeah. And if we look at IPC though through the value lens, obviously the cash flow numbers are exceptional. But I think when you look at it, also the valuation of IPC, because we're Canadian listed, we have to publish our net asset value on an independent reserve auditor's price deck. And at the beginning of this year, our net asset value was 72 SEK a share. Today, the stock is trading around 40 SEK a share, so close to a 50% discount on a very conservative oil price of $48 Brent for this year, rising to only $57 by 2025. So when you look at that disconnect between the cash flow we're generating and where the NAV is standing, it certainly lends itself for us to buying back our own shares. And our balance sheet is now really in that position. We should see our leverage levels fall to below 1 times net debt to EBITDA, and that was the last level when we were buying back shares. But we have done 4 acquisitions in the last 4 years. It's part of our DNA, and I'll be very disappointed if we're not producing more than 45,000 barrels a day in 5 years' time.
Okay, sounds good. Another key theme of the conference has been the energy transition and what's happening there, and especially the oil industry's need to kind of address the footprint they have. Can you talk a bit about what efforts IPC is doing in that regard?
Yeah, and it's a very, very clear strategy in terms of ESG needs to go hand in hand with your growth aspirations. And just alongside our second quarter results, we published our second sustainability report. At its core is a 5-year commitment for us to reduce our net emissions intensity by 50%. So down from 40 kilograms per BOE to 20 kilograms per BOE. We're on the second year of that journey, and we've doubled our carbon offsets from 50 to 100,000 tons this year. And we've made that commitment to continue and reduce that by half by the end of 2025. So yeah, absolutely very important to have a very clear and some firm commitments with respect as to how you're going to manage the transition.
Okay.
Thank you very much. I will just sum up with some final questions. You talked about dividends, buybacks and M&As. I would just like to know if there is any M&As on the schedule, any focus areas or what you look for?
Yeah, no, it's an excellent question. And so far, as I mentioned, we've made 4 acquisitions in the last 4 years. The first 3 were all in Canada. And one of the reasons we went to Canada was you had a very difficult and challenged market. It was a classic market situation that the Lundin family likes to take a very contrarian approach. And you had big, wide Canadian differentials. So we acquired a material resource base in that downtrend. As we look ahead over the next 2 to 3 years, that has completely turned around. Canadian crude prices have strengthened, differentials have improved, gas prices have increased. So that kind of counter-cyclical approach in the Canadian energy space has served us extremely well. And we're still actively looking at further acquisitions in Canada. But if you look at the success of any of the 13 Lundin Group companies, it always starts with asset quality. So we're looking internationally. We're prepared to move into new jurisdictions, but any new jurisdiction, it would have to be on the basis having quality assets that we can feel we can add value to. But yeah, as I say, I hope we've done a few more transactions when we talk again in the next 2 to 3 years.
Yes, looking forward to that, and we will follow you closely. Thank you very much, Mike Nicholson and Tomeka Kristiansen.
Thank you.
Thank you.
And thank you very much to Pareto for hosting us. It's great to be here in person. So thank you very much.
Thank you.